Hey guys, so just from what was going on in the Discord and people asking me some questions, maybe there's a bit of confusion around different things that we're looking at. So I'm going to try and really simply break down the process in terms of how you're gauging market direction, what the market is doing, and how to kind of locate your areas. Are you always going to be accurate? Probably not, but if you stick to the rules, it's going to give you a much better understanding of what you're looking for. So the first thing I always say is with your highs and lows, this is how you're defining what's actually happening in the market, and the higher time frame is king. So with the higher time frame, there's always a stronger pull in terms of direction of what it's doing on the higher time frame rather than the lower time frame, because structure on the higher time frame, if it's making a lower high and then a lower low, the higher time frame is directionally downtrending. But if the 1 minute is making higher highs and higher lows, that's an internal structure of that 4 hour time frame. So to give you an example to visualize this here, um, I'm gonna see what we have here. So let's say, okay, here we have a low that failed to make a higher high. So this was the breaker structure here. I'm just going to use this range here though as an example. So this high made this low. This failed to make a higher high, so this is our 4 hour high in this range. Yes, it is. So I'll say that did its job. So this higher high, or sorry, this lower high created a new low, which is down here. So this is our strong high. It did its job, so our assumption is within this range it's going to be protected. So I can say that's a 4 hour strong high. It did its job. And so far, this low has failed to make a higher high. So it's failed to break the high that's done its job, which will create a chock in that scenario on a 4 hour. Because if a strong higher low is violated, then the assumption is that the market will then continue on to push higher. Like obviously, it could pull back and then continue higher, but the assumption is then once a strong higher low is violated, broken and closed, not just broken, um, it will then need to, or will then probably continue on in the direction of the break. And that's why the close of the candle is so important. So let's define our range here. We have a weak low because so far it's failed to do its job. So that's a 4 hour weak low. Now this low could then go on and continue to make a higher high, and then that would just redefine that low as a strong low, and that's simply it. But as of right now, this high did its job, this low has not. So our internal bias here is bearish. So what do we have within this? We're then looking at our internal structure. So this is external structure. We're looking at our range. Our bias is dropping lower. If I go to daily, then let's have a look at our daily structure. We have a high, fell to make a lower low, made a higher high. So this is our strong daily low because that did its job. So it's a daily strong low. Why is it a strong low? Because it did its job. It made a higher high, creating a daily break of structure. So now we have a fair idea of where the market could pull back to. Could it pull back all the way down to here? Quite possibly. Could it be bouncing from here? Quite possibly. I don't know just yet. So then when we're looking at that current internal range, so we're going to take that 4 hour range that we have, we could say the probability now is quite high. You can see there's a whole massive gap in price here. This is what we call a fair value gap. So if you've studied ICT, it's just a big load of space in between price that can tend to be filled. So for example, there was a fair value gap here between these levels. So you can see that gap in price, and then price came down and filled that price. Same with this fair value gap, came down, filled the price. There's a fair value gap here between these. Price came up to fill that. So the general rule is now, if I see here, there was a fair value gap between these. So prices come up, come down and close that gap. And now we can drop down to 1 hour. So let's look at our 1 hour internal structure. So we've had a low, it's made a lower high. That high has failed to make a lower low. So this was a weak high because it failed to do its job, and that was ran. So it was broken and closed. So our internal structure is now bullish. So again, it could run up here to close the gap. It could run up here to create a new high. I don't know yet. So now we're looking at our current range. So we have a 1 hour low. So we have high, low. This is our strong 1 hour low. So that did its job, and it's made this higher high. So this higher high has failed to do its job so far, so it's a weak high on a 1 hour chart. So that's now redefined our 1 hour range that we're trading from. Let me just get rid of all these two. So we have a 1 hour, so it's 1 hour chuck out of there. Technically, to bring it back to just something here, so you can see there was a low down here previously, and then there was a lower high. So this is the high that created this entire range down here. So this low failed to make a higher high, so that's defined as a weak low. It failed to break and close above that. There's a pullback happening. This isn't as clear to me, but again, we don't need to always go for trades that are like 50 to 1. We can take a 2 or 3 to 1 if price is lining up with it. So we'll drop down to 15 minute. We have on the 15 minute a high, made a high, failed to make a lower low. So this is our strong 15 minute low here. So we can define that. So now we're just breaking down our ranges that we have. I'm just going to get rid of this so it's not confusing, and this as well. So 15 minute low that made a 15 minute high. Where could it pull back down to? There's space and price here, and there's also the order block. So we're within the order block and we're within a fair value gap. Price has just bounced off the fair value gap. So to then determine the structure, we have a break of structure to the downside here. So it's 15 minute bus, and then we'll see the highest point that made that has been broken and closed. So technically we are now in an uptrend from here. So where can I locate areas of interest? So we have a high, a low. I would say it's probably going to pull right back down. So I would be looking then to see within this range of this high, this high and this low, what's going to happen within here. So we have fair value gap here, we have a fair value gap here, and we have a fair value gap here. So what I could do is, do I know which one it's going to pull back to? Not really. Do I know if it's going to go lower or higher? Internally, it's given us this space here. So we have our 15 minute. Do I have that right? Let me just double check. I might have missed that. I just want to really be sure that I have. Yeah, it's a very weak chalk. It didn't blast through this high and then come back. So I'm not overly confident in it, but I definitely think we're in the start of a pullback here. We can have a look then and see what's happening on the 15 minute chart. So we have a low, made a higher high, or sorry, on the 5 minute chart. It's created a 5 minute break of structure, and this is the low that created that. So that is a strong 5 minute low. I don't even think I mark off 5 minute lows. We'll just say it's 15 minutes just to have it marked on the chart. 15 minute strong low. And so we'll assume, say this was a 5. Let me just change it so it's not confusing. So this low, this 5 minute low, did its job. Now what I'm assuming, we're starting a pullback. So what could happen here is price could come down, create a chalk out of this, but it doesn't mean we're running all the way down. It's just a 5 minute chalk, and price could pull back up into a level and then continue to fill in this price. But our assumption would be, that this 15 minute low, this 15 minute low did its job. So it created a higher high within this internal structure. So there's a good probability that price won't break that. And again, what I can do is use my rules to monitor that. So I'm looking for then as it comes down, say it comes down to this price here. Let's see if we just draw it out. So let's say it starts trickling down, so it makes a low and a high and a lower low, and it breaks and it pulls back up and comes down, maybe sweeps a little liquidity and then comes back down lower as it's coming. I can then watch it and say, right, it's hitting this price and it's starting to move really slowly, made a lower low, then it makes a chock. So then I go, right, well, there's a probability that's going to turn here, and then it pulls back to meet that chock, takes out the 5-minute high, pulls back. I can then say, well, let's enter here. Let's see if there's a 1-minute chock out of this level, and then we look for our high up to another level up here. So you can see that structure that's in there. We have our internal changes of character. When we get our 1-minute chock from a level that we're interested in, as an example, we say, well, here we have a change of character. I didn't draw that right. So, and then we have a 1-minute strong low, and then that 1-minute strong low continues on to create a 5-minute change of character. So that breaks and closes. We look for another 1-minute change of character just here to then shoot up and go for the next higher time frame area of interest. Would be this potential weak high here. So that's why I'm saying I'm not short or long just yet, because it's such a tricky area. I don't want to assume that if it's just going to start continuing trend, then it will push up. So I'm looking at it here. So say on the 1-minute chart to make a decision on what I'm going to do. At the moment, internally on this 5-minute range, I'm downtrending, but it could bounce anywhere here. Like, so we have a low, failed to make a higher high, hasn't made a lower low yet, so we can't really define anything there. So yeah, that's again just to give you an example of what I'm looking for. But say again, I don't know if it's going to work out here. It's not part of my system, but we've made a low. It would need to break all of these highs. But let's just say this is a change of character here on this level, and I want to enter. I could say, well, let's hit this, and we'll aim for the highs that are on that as well. So price pulls back on a 1-minute. We get our entry, and we'll say, right, well, let's go. I would definitely need, like, say on a 1-minute chart, a change of character above this high for it to be definitely a long. So this is probably going to go short here. I would never take this trade, but let's just say we got filled and it was correct and it created that change of character. But you can see here, even on this is a good example of why I would not be long here, is that this low made a high, which was here. This high failed to make a lower low, but it was ran, it wasn't closed. So you can see here there's no close above that high. So now essentially you could go short and say, well, let's pull it down to, I don't know, liquidity or something like that. Again, I wouldn't take this trade. There's nothing here for me right now, and it's all because of this 1 hour high. I have no clear direction yet. Until it starts trending, creating higher time frame changes of character or breaks of structure, I don't want to know about it. The areas like in this whole leg up here, because it tapped into a level and started moving, we look back at this and say, well, let's see what happened here. So it came down, made a low, made a high, made a lower low, had a change of character out of this, came down, we had a sweep. So yeah, you could have been caught out on that. I'd try to give it a couple of pips spreading that just to be sure. And then I'm looking to see, right, well, it came up, failed to make a higher high, failed to make a lower low, so just a whole consolidation block there. You don't want to be trying to catch lows anyways. You definitely want to wait to see something clearer. But then we have a high low, we have a break of that, and it came back down into this level here. So then what I could see is it starts trending, it makes a higher high, comes back down off support here, and I could long that, so that's a much easier trade to catch because you know it's probably going to be going up for these highs here before there's a pullback. So it's swept liquidity. Um, Today at 11 a.m. it is in Dublin. Do you really want to be looking for massive trades now? Best thing to do is let the market do what it's going to do and figure itself out right now and sit it out now, unless you're going to scalp. And that's what I've been doing this morning. I'm looking for 10-20 pip trades off a scalp as I was going up and down between these levels, because I knew where the probability was going to lie. But I'm not going to try and hit massive trades at this stage. I want something much bigger, much easier to confirm, higher time frame confluence. So if I go back again just to show you what we're looking at on this. Oh, sorry, we're on Dow. I'm not actually on. I was trading Nasdaq earlier. It's almost laid out in a very similar way, so you can see the correlation there between them. They're quite similar in structure, not the exact same, but very similar. So yeah, to identify what we're looking at here, we have 4-hour break of structure to the upside, 4-hour bus. We have a strong low. So the lowest point in this range from this high to the low that then violated that high. This is the lowest point that created that break of structure to the upside. So that is a 4-hour strong low. Yeah, and then that continues up. We have a low. So again, that's a 4-hour break of structure here. And this is kind of the key component. This is what you need to try and get used to over and over again, is identifying these levels on whatever time frame you're trading. So we have a 4-hour strong low. Price pushes up and never comes down and violates that after the break. We have a higher high, comes back down. Technically this is a strong low, so it was a high. It did make a high, it didn't close, but it's still a high. So this did its job till this point where it was then broken again. So because this then broke a higher high, which is here, it did its job successfully. Sometimes that can be hard to spot, but it did do its job. So then we have a strong low here, and just to blast through it then, so made a higher high, fell to make a lower low, made a higher high. So then to identify the correct level was this was our 4-hour chalk, because this low did its job. It made a higher high, but then this high was the highest point that created a change of character. So I'll get rid of these just to make it simple for you to see. So we have a 4-hour change of character, which is telling us now we have a change in direction. And this high did its job. It created a new low. So there was a break and close eventually here. So this high is now a strong 4-hour high. So our expectation is this is protected, it does not get violated, and that's exactly what happened. So price pulls down, comes back up into the level, and then continues to eventually break down lower. So it comes down, sweeps the low. We have a pullback. You can see there's a fair value gap here that's closed on the 4-hour. So if you can identify these, sometimes they're a nice level to see, is there a trade coming from? And then this high then creates the next break of structure here. So we have 4-hour break of structure. This is now our strong 4-hour high. And then you can see it's not violated, it's broken all the way down, 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 down. There's no lows within there, and that's why my expectation is still bearish on this. So until we get a valid break, I don't know if this high is going to create a new low, but we have our 4-hour week low, because that has not done its job yet. It is coming off, and you can see there's a daily. This was our daily strong low, so this could be protected. I don't know how deep it's going to go into this range. I don't know how far it's going to pull back up into this range, but as long as this is not violated, we're still in a downtrend. If this is violated on a daily chart, we're definitely in a very strong downtrend. But so far this is a probability that until this is violated, this is our target. So I hope that makes sense. And if there's anything I haven't covered in that you want to know of, just drop me a message in there. Thanks a mil.